they said, can you turn this clunky old product, which is invoice finance or receivables finance, pretty much a bad, dirty word in the world of banking, right?
Factoring used to be the one, yeah.
Factoring, yeah. And how do you take this and turn it into an overdraft?
It's a strategic sell. It's not an operational sell, because what you're competing against are their internal departments that should be doing what you're doing. So this is where I think it's so hard to get to the strategic people within the banks these days to be able just to make your 10-minute pitch and say, here's where we can add value.
It's the emerging trend of fintech bank partnerships, where actually a fintech has created a customer-ready solution, and it's ready just to embed into a bank. Yeah. We call that not embedded finance that everyone's talking about. We call it embedded fintech. I think the consultancy still have a place, but actually, as a small fintech like us, we are the consultancy, right? We go into a neobank or an AltFi or a big bank, and we say, look, we either talk your language or we're educating you on a product that you don't know. Yeah. Let us be your small consultancy. You get us as part of the package.
Hello and welcome back to FintechOS Evolv. On this episode, I'm joined by two people from different sides of the spectrum. Got Andrew from SMEB Bank and yourself from Bourn. I refuse to say AI. Just come back from his fresh tennis lesson. Delighted here to be talking about all things banking and fintech and SME. So start with yourself. So SME Bank, congratulations. Tell us a bit about it.
It's we've got a legacy business we've been running for 15 years. It's a small, medium enterprise. For years, we've been frustrated by the lack of support from retail banks, the lack of products. You're forced into the second-tier providers that charge high fees. So we thought there's a massive gap in the market to provide the full spectrum of financial services for small businesses and actually help them and ultimately become their conscience, help them with financial planning, help them through their problems in life. And our focus is all about giving life balancing financial services. So, and the big difference, which makes us massively unique in the UK, we've been told by the FCA that we are the only fintech that has got permissions to handle cash. So we're able to put cubes back into rural locations and provide financial services in areas where the banks are pulling out their branches. So it's really exciting, really challenging, and we're looking forward to it.
Oh, fantastic. And from one founder to the next, Roger, tell us a bit about Bourn.
Yeah, so kind of building on that really, Bourn is about sort of building on a gap that we saw in the market, which is not necessarily providing a full spectrum of services to SMEs, but looking at actually what's the key product that growth businesses need from their bank or from their financial services provider, and which part of the bank is actually really broken. And we sort of narrowed that down to working capital in general. Yeah. There's many different forms of working capital, but our background as founders is either in banking or sort of in technology that supports banks in this way. And everyone really told us that customers or SMEs just want a really simple, easy product to use like an overdraft. Yeah. But obviously the banks naturally want more security over an unsecured product. Yeah. And they don't necessarily want the cost involved in managing really clunky products, which typically sit within their corporate bank. So Bourn really is about taking the most up-to-date technology like open banking, open accounting, and banking as a service, and building the industry's most advanced working capital solution for growth businesses that essentially can use their data in real time to fund invoices alongside the growth of their business, and basically use the account that we provision, we call it the flexible trade account, use that account to make payments, to manage their receivables, and to essentially have access to a working capital limit that grows or flexes with their business as they go through different phases.
It's interesting you use the term SME. It's like a broken banking, which is it's great because that's a challenge that both of you guys in your businesses are now trying to solve. So I mean, as SMEs have been underserved for quite some time now. Why do you think that is?
I think, if being honest, the large retail banks have got complacent. I think, and also there's no customer relationship anymore. 15, 20 years ago, if you wanted something from a bank, you'd go and talk to the bank, to the bank manager, and you'd get things resolved there and then. As people have tried to become more efficient, and all of a sudden it's a checklist. And if you don't meet the checklist exactly, they just move on.
Yeah.
There's no actual discussion with the client. There's no trying to understand their business situation. Have they won new contracts that's going to give them, hence the need for funding to support growth? There's no desire to understand that.
Yeah.
So I think, what goes round comes round. So I think where we're heading to is, and I believe the future is going to be a more consultative approach to banking, and that's where the success will be.
Yeah, I think you see that. I think when you're an SME business, maybe even micro, the ability to have a conversation with a bank, go to a branch, go to see the old-fashioned way. Banks are necessarily not particularly massively interested in that segment. We all know it's a high volume, kind of low value proposition. But then, unless you nurture those businesses in that stage of their business life cycle, they become commercial and corporate clients. And of course, everybody's interested then. They're massive income earners. But that segment there, it faces those type of challenges. And so, your business is trying to address that challenge by using, say, some of these open banking tools and trying to make that ability to access finance a far lot easier.
Indeed, yeah. I think there's a key difference. I mean, many players will suggest that they use things like open banking to extract data, to do faster credit underwriting, and many are extending that into other forms of data like open accounting. And typically these are the new fintech providers that are kind of offering new products. Either they're kind of unsecured loans, business loans, which you can open quickly. You've got kind of things like merchant cash advance, or kind of the emerging trend of revenue-based finance. But even some of the biggest fintechs, actually, in our eyes, it was still only scratching the surface. Yeah. And there's key reasons behind that is that fintechs don't necessarily have access to the cheapest funding on the market, right? You need to go out and raise private capital in many instances, and that doesn't come cheap. Yeah. And when you scale, it gets a little bit cheaper. But they've done a great, they've done us a great service in sort of painting a picture of what banking could be. Where Bourn is different is that we fundamentally believe that actually banks can deploy their balance sheet to these businesses, but under a different model. I completely agree that banks don't necessarily have the appetite or indeed the capacity to service smaller, fast-growing businesses in certain segments. And they really want to kind of double down on their core propositions in the corporate bank or in business banking, for instance. Yeah. But the balance sheet that they deploy could be deployed under a model like through Bourn that actually still delivers an exceptional product to the customer, and the bank benefits by still getting their yield. So our partnership model is kind of through years of experience. Is we fundamentally, the banks find it really difficult to purchase technology. It's not just hard to sell into banks. It's very hard for banks to buy. So we're all about sort of making that process easier and doing it so that balance sheet, the cheapest capital on the market, can reach the businesses that really deserve it as quickly as possible, and everyone benefits.
Yeah, I think it's you're exactly right. It's not the fact that the banks don't want to do it; they don't have the understanding and they don't have the ability to embrace the technology and actually utilize it, because they're just so complex in their own organizational structures. Yeah, getting things approved and up the ladder is just so difficult.
Yeah. And we understand that. We're not bank bashing at all. We're sort of saying we understand that it's very hard to buy. We understand you've got your day jobs, and big organizations are struggling to sort of understand this new wave of AI and how it might transform them. So stick to that. Go and do your digital transformation if you need. But we're sort of that lifeboat strategy that says, okay, you still don't need to lose out on the opportunity. As fintechs come along and eat your lunch, you can benefit too. You can fight back a little bit and still the customer benefits.
Yeah, it's interesting because we've done a few podcasts around digital transformation, culture, the reasons why some of these things fail, and experience and knowledge around the Exco and the board table comes up quite a bit. And actually, friend of the podcast, who's a net of yours, which is Leda Glyptis. She's a leading voice on this type of thing. So if you've started this bank, you're embracing technology. So you're kind of the flip side of that coin. You kind of understand it and know your background. So how you kind of using technology to fill that mismatch of the customer need, I guess.
But I think the first bit is it is a psychological thing. Within banks, people are petrified of proposing something if it's going to get shot down.
Sure. Yeah.
Whereas if you actually embrace it, and if you're going to make mistakes along the way, you've got to be ready for that. I always say to the guys, as long as you don't make the same mistake twice, we're okay. Yeah. And I think that's where we're willing, but then our organizations are flat. You know, we know exactly what's happening. We're close to the coal face, and that's how you make the right business decisions, because you're so close to the customer requirements. That's why the retail banks are struggled, because the decision making is so far away.
That's a great attitude to have, right? You're saying, like, basically fail fast, right? But challenge the status quo and be innovative. That's not stereotypical of a banking executive who are very massively risk averse, which is, I guess, why SMEB you're kind of making waves in that segment, because you are challenging it.
We are. I think where if I was to open up areas that you get frustrated with is where you still need the support of the retail banks. Yeah, and their lack of understanding, their lack of prepared to take a risk. You know, they're actually at the point where risk is just they'll take no risk. Yeah. Whereas business is about taking educated risk. Yeah. I think that's where we're getting frustrated at the moment. Is we do want to grow with the banks, not against them, and I think there needs to be a balance in the industry. Yeah. Much like businesses and fintechs of your sizes are trying to cope with those challenges. Back to kind of the SME who you're supporting with Bourn, providing that different type of access to finance through the Bourn platform and the overdraft. How are you changing the shape and the feel of a stereotypical overdraft through your platform? Well, I think really fundamentally we're not. You know, there's sort of broken things behind the scenes about overdrafts because they're unsecured, and the banks see it as a unfavourable product that they've sort of taken away over the last sort of 10, 15 years for good reason. It's capital inefficient. It typically has quite big overheads when you come to kind of auditing it or sort of renewing that facility. And obviously it's completely uncommitted, so the customer can utilize it whenever they want, and the bank can take it away. So there are some kind of fundamental flaws in the overdraft, but every single bank that we talk to, and our network is banking, and really in the corporate banking space where they're much more used to sort of secured products, they said, can you turn this clunky old product, which is invoice finance or receivables finance, pretty much a bad, dirty word in the world of banking, right? Factoring used to be the one, Factoring, And how do you take this and turn it into an overdraft? And that was basically what everyone was saying. And the deeper we got into that, they've basically been saying it for 30 years. There's there's an overdraft, there's invoice finance. Can you blend the two and sort of make the experience harmonious? And really, it was a timing thing. It was a team thing. It was an experience thing that the three of us as co-founders sort of brought together. The tech guy that understood the problem really, really innately and basically built it very quickly. You're going to name drop him? Yeah, Paul, our genius tech guy with our tech team. Paul, you got your shout out. Nick, our ex-banker, ex-NatWest, ex-Barclays, kind of had we never got to, I'm sure I must know him and he must know me. I'm sure you do. I'm sure you compare war stories in NatWest. And myself, the lowly sales guy, who kind of dresses everything up and makes it look good. We sort of landed on our experience and saying, well, I think now's the time to do it. You've got the advent of really good technology and AI supercharging all of that. And the banks are actually changing their view on how they partner and how they deploy capital. The fintechs, as I said, have really led the way in how to do that. Let's face it, many fintechs are actually backed by the banks. They are. So it's not bank versus fintech. It's actually the banks are getting great yield off of some of these fintechs. There's a whole financial ecosystem behind the scenes. So they've learned from that. They know how to partner with fintechs now. They just need it to be easy to buy. So our strategy was basically design the product, make it as good as possible, take it out to customers and get their feedback. And we brought them into the office, we onboarded them, and we took them through our vision of what it's going to look like. And the feedback was exceptional. They were like, this is just so easy. I've got my bank, I've got my account, my Bourn account. I've got my bank connected up to it so I can see the balance in it. I can see all of my eligible receivables coming in from my accounting ledger. And that's just APIs, right? That's kind of table stakes in this. But actually you've done some really clever things behind the scenes to actually make me aware of what's eligible. To allow me to draw down or make payments directly from the account. And you've done a really, really clever thing that we solved, which is partnering or embedding it into the ERPs to solve reconciliation.
And that reconciliation piece is something that the banks have never been able to solve properly. And you can only do that if you're able to feed transactions directly from your platform into the ERP.
Yeah.
And then at a click of a button, the customer reconciles it, we update the facility, we close out the invoice. And it was that, when we saw that, our jaws dropped. Paul built it, and he got just as excited by us. He's not banking by background, but he sort of knew the payment space. Me and Nick got very, very excited when we saw that.
I remember back in my early banking days to work out eligibility for an overdraft for a business. It was pretty much a standard 10% of turnover or 20% of trade debtors less than 90 days. That's it, done.
Which
There's
is
your
nothing
limit.
when it comes to working capital,
yes,
right?
That's not
10% of what they need.
Yeah.
You want to be up at the sort of 80, 90% level.
Yeah.
So we've got to the sort of 80, 90% level, and the banks that we're working with have recognised that, but without the cost and without the overheads and without the sort of drag or friction being put back onto the customer.
Yeah. Andrew, do you see this type of, I'll refer to it as new tech, it's not necessarily new tech, but do you see it as more of do you see it as a threat or a collaboration piece between fintechs and banks?
Oh, definitely collaboration. I think that's the problem. At the moment, there's the view that fintechs are out to kind of undermine and take away the banks. At the end of the day, you have to recognise the banks are they've got the trust, they've got the power. The goal has to be to work together. Our goal is to work with the banks, work with their customers to give them services that align with their services, but put it back into the community. I think that's where banks at the moment are just looking at how do we become more financially profitable, and they're making decisions that I would argue are not in favour of their customer base. So I think that's where working with fintechs can address it, because they, we're looking at a small piece of their whole business, but we're the experts at it. Both of us are the experts, and we're adding value. They just need to embrace that and go, brilliant, let's jump on this, and off we go.
Do you notice how that I always feel the attitude between banks and fintechs over the last 10 or so years has massively changed. I can remember in some of my old shops there was a certain arrogance about banks with fintechs. Like, kind of, we know what we're talking about. What are you coming in here in your shorts and your tennis outfit?
It's 30 degrees outside, I'm going to say.
Telling us how to run our business and telling us what our customers think. And actually, I wouldn't say the power shift has gone their way, but it's more seen as a partnership now, rather than I'm a big bank, you're a vendor of mine, and you'll just kind of do what we say. I think that's driven a lot of the innovation and that collaboration within both finance and technology.
But I think this is where, and you'll see this, I'm sure, with your sales approach into banks, there's a pivot point where you have to pitch at. It's a strategic sell. It's not an operational sell, because what you're competing against are their internal departments that should be doing what you're doing. So this is where I think it's so hard to get to the strategic people within the banks these days to be able just to make your 10-minute pitch and say, here's where we can add value. That's where I think the banks need to get more into the industry, and actually, their leaders are front of house.
It's interesting. I feel you're spot on, and a lot of maybe some of the bigger banks. You've probably seen this a bit when you pitch to some of the bigger banks. Do they necessarily hide behind big kind of solution integrators? Do they hide behind the Accentures, the PwCs, the KPMGs, this one? Do you have to almost pitch to those guys to get into the big banks, get onto their marketplace?
If you're a B2B SaaS player, yes. If you're selling a platform to a bank and you're asking to sort of be part of their transformation, there's big reward in that space, right? There's big budgets if you can get in there. But as a 5-person organisation that we are, that's just over a year old, recognising we're probably not cut out to do that yet. And actually we don't necessarily want to do that.
And it's not holding you back. It's not.
Like to your point. Whenever we go in and we sort of sell to the business stakeholders, who are typically the sort of head of product or the head of coverage or head of sales, and they go, oh yeah, this would be great. I'm just going to, can we set up a demo with our product team and our sales team and our risk team? And we go, whoa.
Turkey's voting for Christmas.
Why are we doing that? We're showing you a solution that's purpose built for your customers. It's ready to go.
Yeah.
If you agree that this is best in class and it's 5-10 years ahead of where you are, let's take this up to a strategic level and get in with the head of coverage or the MD of the bank. And that's not really it's a sales tactic, right? It is a sales tactic, but it's actually just completely differentiating yourself from a platform provider where there's a space for and all of that transformation journey. And you're helping that person that you're speaking to and saying, let's elevate this, let's elevate you. Yeah. Let's take this proposition to actually drive revenue at a lower cost with no additional risk. Yeah. They're the three key messages that we go in. You present that as a way to deploy balance sheet at an MD level, and they just see revenue opportunity.
Yeah.
So it's not unique, but it's the emerging trend of fintech bank partnerships, where actually a fintech has created a customer ready solution and it's ready just to embed into a bank. Yeah. We call that not embedded finance that everyone's talking about. We call it embedded fintech.
Yeah. Okay. Yeah.
Embedding your fintech into a financial services brand before we then go and embed it into non-financial brands.
Well, they have all the data. It's the perfect combination.
I'd argue we've got the data.
Well, you know how to utilize it, and you've got
correct.
Absolutely,
they've got the customer base.
They've got the customer base,
and we don't have a big marketing budget to go and do that.
Data's interesting. So look, open banking, open source, open accounting. Yeah, everything is an AI. Of course, it's all going to be driven by good, clean data. And you're right. Banks have an absolute wealth of data that sits in various databases within their infrastructure. I've never come across a bank or worked for a bank that really truly knows how to commercialize it because they just don't trust it. They're built upon database, data dictionaries upon data dictionaries upon data dictionaries, to the point where a spade's called a shovel, called a fork, called a knife. There's no common language. So
their databases are probably siloed. You've got one for mortgage, one for point of sale, one for issuing. They don't actually talk to each other.
They can't talk to each other. So they've got they've got all this currency. I think, crikey, I really want to commercialize this and provide insight to my customers, but they just distrust it so much. So it's almost better to kind of like turn a blind eye to it. Go, okay, we've got that data, but we'll rather go to a third party because at least we can trust it to be able to drive automated decisioning, affordability checks, and all that kind of risk-based analysis, which is a real shame. And I wonder if banks out there just truly invested in solving their own data crisis, actually, then they will be able to adopt these type of platforms, open banking, and of course AI, in the future, and be able to trust it to drive better solutioning for SMEs and customers.
But also, I think the banks, they only go to people like Accenture, E&Y for the change projects because they're the brands that are seen as reputable. They won't embrace, or I won't say they won't. They're reluctant to come to the people that are experts in their field, and I think so. It's a shame, but it will change.
Yeah, I think I'm starting to see a slight shift in it. So I mean, one of my colleagues uses the term all the time. Nobody gets fired for using IBM. It's an old saying.
Or McKinsey.
McKinsey's right. Yeah. So, and we've seen a lot of digital transformations come about over the last few years, and majority of them have failed for one reason or another. And a lot of the big name people have been involved in those transformations. So if you're a CTO, a CEO, or a board member, you almost hang your hat on the reputation of these folk, right? And it gives you an aura of protection. The reality is, they haven't got much skin in the game. If you went to more of a niche, boutique type people who really know their stuff and are really interested and have the same amount of equitable stake in that type of transformation, I think they're going to perform a hell of a lot better. You'll see a lot more successes, probably be a damn straight cheaper as well. But it's that fintechs bring agility and speed, banks bring kind of that trust and scale. And we were talking about in the green room earlier on around how do folks like yourselves build that trust? And it's a challenge you both got to get over, right?
Yeah, I see it slightly differently from your kind of route in through partnerships into banks. I think the age of the traditional consultancy is being challenged. I think we're seeing a lot of job cuts and transformations that have cost a lot of money. I mean, I haven't heard of many RFPs coming out in the banking industry for quite a while.
Not for large scale,
not for large
greenfield
scale,
branded banks,
which is crazy, given that you used to receive one every week. So I think the consultancy still have a place, but actually as a small fintech like us, we are the consultancy, right? We go into a neobank or an AltFi or a big bank and we say, look, we either talk your language or we're educating you on a product that you don't know. Yeah. Let us be your small consultancy. You get us as part of the package. Yeah. And by the way, you get a whole solution alongside it. So in early days like this, we don't necessarily need to lean on the consultancies. Where we do lean on is technology providers. Mm-hmm. You look at AI and you look at kind of the adoption of AI-based solutions. There are a couple of clear kind of forward winners in the banking space that you'll probably see time and time again. I say winners. Let's say key partners like Microsoft. Mm-hmm. Microsoft, I think it was Microsoft and Barclays have just announced that they're rolling out Copilot to all of the Barclays employees. Yeah. That feels like something that we've all had for years, but it's great to see, that Copilot will be rolled out and it's going to be rolled out in a safe way. Now, we built on Microsoft for that purpose. Yeah. We have all of the tooling that Microsoft give to us, including the OpenAI capability. Yeah. But you also have this interface, almost a delivery mechanism to actually go into a bank and say, well, instead of going through the consultancies, let's imagine a world where actually Bourn as a operating system for a bank is completely subsumed into Copilot. Yeah. So we're not precious about our software at all, our UX, We've done some very, very clever things behind the scenes. But I think we can extend that sort of concept of embedded fintech into embedded finance, into almost embedded experiences within that sort of Copilot arena, and maybe other sort of platforms in the future. That to me is a logical path into a bank. It's through tech parties. There's all sorts of commercial benefits there. But Microsoft do the sale for you. They go through the governance with the bank. They've deployed. You don't just switch on something like Copilot if you're not sure that it's going to be safely used and that it's only got access to the right data, and that's not escaping. Yeah. So we're actually building for a future where I would love to see Bourn's interface, our lender portal, which we utilize in-house at the minute, but we're gradually sort of deploying into banks. I'd love to see that disappear. And just see all of the insights just pop up in Copilot. And then that becomes your conversational interface for banking of the future, whether it's an RM trying to get insights on their business, whether it's a risk manager trying to manage covenants or monitor risk aspects of the business, or whether it's an operational user trying to manage a fraud alert on a payment. Mm-hmm. All of that can just be surfaced into a Copilot type interface, and sort of that world of traditional platform B2B SaaS interfaces that are clunky and very hard to manage and very hard to configure and maintain goes away.
I think that's it. We talk about that type of attitude you've got, Andrew, around that innovative, fail fast, and to truly adopt what you said, which I agree is the future. And just to be fair to other people, Gemini with Google and stuff like that, they similar type of practice. And there's a few independent. Covector on the sofa here a number of weeks ago talking about this very thing. So and Bud as well talking about so everybody's talking about the same thing. And it does take an entrepreneurial spirit to embed that type of stuff into additional bank, into an infrastructure, the trust enablement of where the data is going, how it can be stored, how it can be safety arrays. And I mean, we've had a couple of AI people on sofa, and we made a joke around banking employees can't even log on to a ChatGPT, a Gemini, a Copilot through their own laptops. Yep. So they'll bring their own devices in, take photos or scroll on, and then transpose that into email back to. So I mean, it's even worse from a risk perspective. But they're allowing that to happen. But why don't you just embed this into the infrastructure in a safe and controlled manner, where you hold the keys to the castle?
Enable it. As I said, ride the wave of what's going on with the big tech players and the banks. I firmly believe that actually banking is a relationship game 9 times out of 10. So it's not about completely replacing everyone within a bank. It's about making it more efficient. It's about actually delivering the insights to the right person at the right time so that you can really maximize that personal relationship that you've got with the bank. So, I mean, I'm massively excited about that.
But I think you're right. The banks at the moment, they view AI as an efficiency gain.
Yeah.
How can we be more efficient with our head count, etc. Whereas, same as you, our approach is we want to mobilize it in areas that makes the customer, the agents, more effective.
Yeah.
They're able actually to see a problem for the customer before the customer sees it, and actually talk to them and inform them and add value to them. I think that's where AI, you need to, mobilize it correctly so it adds value rather than just seeing it as, because so many people have come out, even I think some fintechs like Klarna have come out and said we can get rid of 2,000 customer agents.
Well, Revolut are talking about their AI,
and that would be the last thing I want to do. I'd be more thinking, how can I mobilize them to add value to the customer to grow the business, rather than. So I think AI. It's still so early, and it adapts so quickly. There's a new version, I think, almost every week coming out. So staying ahead of it is such a challenge.
But as I said, there's some consistency in there that Microsoft and it being deployed into banks, or Google Suites into banks, or potentially even Salesforce, not so much these days, but Salesforce into banks for CRM. There's some consistent platforms that need to react to this. Mm-hmm. So use that as your shop window. Use that as your delivery mechanism. And actually, you can start to imagine how the target operating models of these banks can gradually change over time.
And become more personalised as well.
More personalised.
At the moment, their strategies are broad brush. There's no niche. Niche doesn't exist in banking anymore. Whereas that's our livelihood as niche markets.
Exactly. Rather than just tarnish it with this sort of cost-cutting exercise, which is what everyone is talking about because it needs to happen. But it's about efficiency, and it's about enabling sort of hyper-personalization for the customer and for the operators behind the scenes. That has huge benefits for how that bank can scale, and naturally cost efficiencies will evolve. They'll be able to do more with the same.
And the customer feels like you actually care about them because you're actually giving them something that's actually bespoke to them, as opposed to here's a loan, but you've got to pay it back in X days, and it's based on 10% of your outstandings.
You write. I was on your website last night. My wife wasn't very happy about it.
I was reading better things to do, but go on.
I was reading a lot of your white papers, and I'd implore anybody listening to the podcast, go onto the SMEB website and read, because they're really, really good, and addressing a lot of the types of things we're talking about today around SMEs. But one of the things I want to talk to you about, Andrew, is this notion of the pod, right? So, you're kind of, I wouldn't say competition with the banking hub, but as most banks and building societies are withdrawing from the high streets, from their branches, you're addressing a problem saying, actually, let's put these pods back in so people can go and visit somewhere and actually do some transactions. So this is niche, and I think I'm going to give you the opportunity to talk about it.
No. We are unique. As I mentioned in the intro, we're the only fintech with FCA approval to handle cash. But I think our solution is, again, talking about being bespoke. The credit limit that individual SME has is specific to that SME. The solution through the government initiative, it's a broad brush. There's one limit you have. Whereas our whole approach is that business, $750 a day doesn't allow it, the ability to deposit what it's taking over the counter. So we customize it to and we that grows with the business. And cash isn't going to stay around forever, but today it's part of the payments method. Over time, we see the cube, as we call it, becoming a financial touch point where the unbanked can go and suddenly onboard for a bank account. We're just about to deploy technology. They can walk out with a card immediately. So suddenly it's going to become a touch point in the community for financial services.
Yeah, absolutely. I think I called it a pod. You're right. It's called a cube. There you go. That's how much. It was late at night.
Semantics.
It was late at night. So the notion that somebody come in, I think you're talking about you're going to put it into potentially some...
it's not front of shop. It's very much in a private corner of some of the major retailers or high street shops where the customer can go in, close the door behind them and have a private one-on-one session with us. They can talk to us on telephony or video call and talk to agents that actually would give care and understand what they want.
What's been the general feedback from your type of customers that want this type of thing?
Very positive. I think that the usage is really good, and customers, after the first transaction is always the hardest one because they've never used it before. But after that, it's a very simple transaction. That what they do like is the interaction with somebody, the fact that they can talk to an agent the fact that they can then talk about other things, and then we try and help them with that. So I think it is being well received. It's probably we're just not deploying it as fast as we'd like to.
You go full circle of the conversation. It's that missing middle of the SME, well, that feel they can't walk into an ever decreasing number of branches in the UK to have that conversation because they just won't be given the time of day.
I think what goes round comes round. Look at some sectors like the delivery sector. Not everywhere you go, you see these lockers where you can go and collect your parcels.
Yeah.
So I think a touch point close to the customer is something that is required. So we do see it changing over time and becoming also, consumer orientated as well as small business. But I think it's being well received at the moment.
Yeah, and in terms of the Bourn platform, you're into quite a lot of banks at the moment. We won't name some of them. And obviously looking to grow. What's been from tier ones down to kind of alternative and specialist? What's been the general feedback of your platform? Because from some of my old shops that want to be in the SME space, one of the barriers has always been the type of data that drives the risk models. Is you kind of need a 3 to 5 year lead period of consistent data across industry and segments to enable that model to be able to spit out automation of decisioning. And so we're kind of only really at the 5th year post-COVID to enable that. So I am seeing a lot of banks now trying to solve this automation issue in the SME world, try and bring it to a uniform position where they can offer these type of products. So you've obviously had some success in that time. What's been the feedback? And are you seeing that start to grow now as that data is becoming a little bit more consistent?
Yeah, I think it's important to note that the product that we offer, the data isn't necessarily predicated on the customer that's actually taking out the account. Uniquely to sort of receivables finance, you're actually looking at the payment history of debtors against that customer. You're looking at the way that customer manages their books. You're looking at the way that the debtors are paying back their invoices, essentially. So almost uniquely to that product, with the data that we get access to, we're already surpassing what some of the models in the market or some of the kind of audits or surveys that happen actually are doing. The ability to sort of extract 2 years of accounting data, which have naturally had bank feeds going into them and the customers have been reconciling. That gives us a really, really rich data set on the payment behavior that we blend with other credit bureau data to understand kind of the turnover around the account, but also the behaviours of the debtors. Then we go to sort of invoice level, and the biggest risk in our world is obviously fraud. So customer comes along, raises a fresh air invoice, they've taken out a new facility, they just draw it down and away they go. But there's some great tools out there, some great partners that we work with that we'll be announcing in the next couple of weeks, which kind of go down and utilise that sort of network of debtors and customers and payment behaviour and start to analyse that more deeply, whether it's payment fraud, whether it's kind of email and phone numbers that might be associated with fraud, or whether it's back to sort of the closed user groups and the credit bureaus. It's just data that we're pulling in all on different consent models. So we've been told by banks, we've been told by lenders, actually in the past year we've developed one of the industry's most powerful risk engine, despite the fact that we've never run a retrospective analysis and looked at good bads, like you traditionally would do in linear regression models. So I think in that sense we're sort of changing the game slightly. The feedback that we've got is brilliant, and it rolls up into the product that is got always on data. We're constantly monitoring new receivables that come in. We're constantly monitoring new debtors, the payment behavior between that, any changes at the credit bureau, any changes in their transaction behavior. We're comparing that with the audited accounts on Companies House, because we get a real-time sort of structured P&L and balance sheet of the business. But obviously that's not audited, so you've got to sit that in comparison to what the business have seen. There is just so many data points that we can get access to now that it's not actually difficult to become quite a trustworthy source of risk.
With all that data we talked about it being, I still think it's a new currency. The ability to push insights back to your end customers around even some of their debtors. You're going to have that foresight, or you're going to have that view of a debtor that actually you're quite concentrated on this debtor and we can foresee there's going to be some issues, you might want to pull back, or actually we're looking at your cash flow over the last trends and we can see you're going to have a cash flow need in X months, or you're going to have a surplus of cash. Why don't you open up a high interest bearing deposit? Those type of insights, right? And they're going to play quite well into your world, Andrew. Those financial and non-financial pushes to a client, and to push them out to a network of trusted partners.
Because the gap we're both filling is small businesses can't afford finance directors. The finance director is the owner, and they're not trained on the financial skills. So we're both trying to fill and offer them advice, help them grow. Which I think, when you look at what they say, 80% of our GDP is through SMEs.
Yeah. Yes.
It's the engine of the economy. So I think it's just so important that you're able to support them, and because if they grow, our economy grows.
Exactly. Yeah.
Is that something, because you've got this super app kind of view of SMEB as well, embedding a Bourn or other type of even non-financial solutions into that, keeping that customer into your own ecosystem and providing those type of insights, and you are effectively becoming the finance director, you're becoming the chief product officer,
becoming their conscience.
Yeah, you're becoming their exco, right? As well, you're actually building a business. You're almost like like AI agents, effectively pushing them and giving them insight and providing the need, and then ultimately pushing them to a solution across the networks that you've got.
Absolutely, and the whole point is, you're trying to support them. You're trying to be their conscience. You're trying to actually help them, but also you're helping them at bad points. There may be a low with revenue that they need to get through, and you're going, well, in your case, here's options. You can release 25 grand in your business without stressing too much or having to sell your kids. Yeah. And you're actually giving them value. So that's where we come in, and that again, that's why our customer support is telephony based. It's on the phone rather than AI. The AI supports them so that they can actually, because hearing it from a person rather
human
than
touch point. Yeah,
it's a human touch point, because sometimes they can be quite distressed.
Yeah, that's interesting. So I always have this last part of the podcast around the future. Okay, where I always like to get people's views of where this world is going, and
depends on Trump, doesn't it?
Depends on a lot of things. So let's start with your Andrew. So if I was to wave a magic wand or give you a crystal ball that says what does your world look like in the next 3 to 5 years, what would be your best guess?
I think that the excitement for us is we're quite unique in the UK market. I think the problem is global, so we've already got some interest from overseas about taking the product into the US, the Americas, Latin America is huge as well. But I think the one bit that would really excite me is the partnership angle, because I think that's the way, by working together, you basically give the customer the most value. So we're in the market looking at who are the partnerships, both from a proposition, but also both from a trusted SME contact point. I think that for me is the exciting bit, and that gives you the hockey stick curve sort of growth prospects.
Do you see the more traditional banks re-entering into the market of SME, or kind of still doing this kind of hands-off approach, letting the neobanks kind of grow in that market, letting other people grow, kind of watching and waiting, and maybe if in this industry is a bit of an M&A going on in the next few years, snapping it up through acquisition? Do you see that kind of playing out?
The bit that always worries me about the retail banks is the fact that their decision-making is so far away from the customer.
Sure.
And I'd hate for us to be consumed into a large organisation, because we'd lose that agility, that customer, and the ability to adapt quickly. We're the speedboat versus the oil tanker.
That's a great analogy.
So I think for me, the banks, I think they will ultimately come under pressure and then break up into smaller units. That's really good for the customer, because that means they'll become focused on the customer. It's also, I think, good for us, because they'll then rely on partners more. But I also think there's some of the older fintechs are heading to the large bank status, and are heading on a similar road. I think that there's still going to be lots of opportunity for fintechs like us that are focus on the customer concern and want to address the customer's issues.
Fantastic. And Bourn, where do we see that going? So you've got a wealth of data, you're growing really quickly, you're working with tier ones all the way through to alternatives, so that book is only going to get even better. 5 years' time, 3 years' time, 5 years' time in the world of finance is a ridiculous amount of time, but between 3 and 5 years, where do you see the markets heading?
I think what's really interesting that we're keeping tabs on at the minute is this convergence between payments and lending. The watershed moment for me was JP Morgan's partnership with Klarna. Klarna is a payments company, but also a lending company. They're a large fintech, but they're also leveraging AI to make themselves more efficient. But they've partnered with the world's largest bank, because the world's largest bank has turned around and gone, that fills a gap that I can't necessarily fill, so let's have a piece of it. So that being the watershed moment, I think we can use that as a bit of a indicator as to where the future could go. And as I said, this blend between payments and lending, I think, is only going to continue. Agentic finance or agentic lending is something that is here. We're doing it. We can make it more efficient. We can support the customer. We can coach the customer, but we can also make banks more efficient. When you start to blend agentic finance with agentic commerce, that's where things get really exciting, right? You're basically getting people like the big, large marketplaces getting challenged now, because you've got agentic commerce, which is kind of matching you with the right solutions, using AI and just finding the right deal for you based on a conversation that you're having with it. Well, if you're buying goods and you're in a payment journey, 9 times out of 10, if you're a B2B business, you also need a working capital solution. So agentic finance with agentic commerce, to me, is the most exciting thing that I think we're going to see. And wherever that ends up, I suppose it could be kind of hidden behind the scenes, or it could be kind of in the big brands. It could be, to the consumer, it's probably just something that you don't notice. You know that you've got what you need behind the scenes, but you're just getting it at the point of need when you need it. So that's something that
There's an interesting question, though, just about that, is because one of the schemes, the card scheme, still controls so much of the payments, and you kind of think they're almost at the point where they're too big. I'd love to see a period where you've got a micropayments environment in a community. You're talking about lending. Like the butcher shop could have a relationship with the pub, could have a relationship with the rugby club or whatever, and you've got not bartering, but you've almost got a micropayments environment going on in the community without the large schemes being involved, because I think they create hurdles sometimes in the payments environment, and also probably some block your visibility to a degree as well. Yeah,
quite possibly. But you remember those card networks could potentially be the enabler of getting out to the merchants. Getting the finance that we provision from the banks matched up with the merchants that need it. So I agree, the large networks do play a part in it. But say we were to kind of pursue a partnership with the network, you suddenly got embedded finance into a card network which is available to end merchants. We've seen a bit with merchant cash advance and these type of solutions, but if you do that on a big scale, if you bring a big bank,
well, not just thinking of lending,
to a big network,
open up the credit card market, that would be unbelievable.
There is no reason why our solution, because we're built on banking as a service rails, that you can't put a virtual card over the top. Again, it's table stakes. It's not a whole new business line for us.
The balance available would vary based on the strength of the business.
We can divvy it up. We can go into spend management. We can have all of the working capital on a card. It can be a virtual card, a physical card. Everything, like I said, every sort of segment of the banking space, whether it's working capital, spend management, treasury management for deposits and overnight kind of bank accounts, FX, every one of those has been disrupted over the last 10 years. And actually, if you're a small team and you've got enough funding behind you and you've got a big bank with you, there's no reason why you can't bundle all of that together very easily and much more cheaply than everyone else. The likes of us could do that, not on our own, but through partners, and actually have this kind of all of bank relationship with the customer that gives them everything they need all in one.
And you just make it simple. Because the type of client base you're talking about, they are thinly spread. They're business owners. They're one-man band. They need that simplicity.
They're desperate for people that understand what they're doing to add value. It's just they don't know how to find us. Is our view on it? We just have to help shine the light.
And this is people like Revolut have been brilliant. They're a one-stop shop, and they are building the one-stop shop for a whole range of different businesses. But they don't need to be the only one.
No, they don't. Absolutely. So if you're an SME out there and you're looking for that kind of support, then look no further than SMEB and Bourn, and maybe one day SMEB and Bourn together You never know. This could be a collaboration, a marriage in the future. We'll be invited to the wedding, of course, no doubt, and we'll take our cut. But look, we've come to the end of the podcast, folks, and it's been an amazing conversation. It's interesting how we do these podcasts, and the similar conversations come up around AI, open banking, SME. It just goes to show that it's subjects and topics on everybody's lips. So it's completely relevant. So I just want to thank you both for appearing today. I'm sure you'll be back on at some point. And for anybody listening, log on to Apple or Podbean, download it. You can see it on YouTube and all your various different devices. Listen on the train or in the car. Listen to the insights and thoughts and voices of these two guys that have bring some fantastic opinions to the podcast. So thank you both for appearing.
Lovely, thank you.